According to the Washington Post, only 34.1% of Americans 18 to 35 own a home. 1/3 of that same age group still lives with their parents. So today I am going to tell you a little bit about the underwriting process of how to obtain a mortgage. I currently am a loan originator for PNC, and I have worked in the mortgage industry for about 8 years. So I am familiar with the mortgage process, underwriting, processing, and like I said, hopefully today I will kind of help you become a little bit more familiar with it as well. So when an underwriter picks up your file and they qualify you for a mortgage, they're going to be looking at 3 things: character, your capacity, and your collateral. So your character is actually going to be what's on your credit report. So an underwriter is going to judge you and your character by what shows up on your credit report. So late payments are going to count against you. On-time payments are going to be positive checks for you. Most credit agencies are going to range your score between 400 and 800, with 800 being the highest. But according to Credit Info Center online, most lenders will allow you to purchase a home if your score is at least 620, and that is the same with PNC. 620 is our minimum credit score. Obviously, your score is going to qualify you for the loan, but it's also going to give you the ability to possibly get a better interest rate. So the better your credit score is, the better interest rate you qualify for. Other things on your credit that are going to affect your character, according to the underwriter, are going to be derogatory items on the credit report. So bankruptcies, foreclosures, missed payments, if you stop making your car payment and someone comes out and takes your car, those are going to be things that an underwriter sees and can affect your ability to even qualify for a loan. So there are certain wait periods after derogatory items. Foreclosures, most lenders, you're going to have to wait 7 years. Bankruptcies, 2 to 4, depending on the type of bankruptcy. Different items are going to affect your ability to obtain a loan a little bit differently. So your character is very important. Now that we've learned a little bit about how an underwriter looks at your character, we're going to talk about capacity. Capacity is actually your ability to financially repay the loan. The lender is going to give you $200,000. They want to make sure that they can get their money back. So your capacity has to do with your income. To look at your income, an underwriter is going to obtain 30 days of pay stubs, W-2s, tax returns. They want to see that you can make the payment back to them and make it on time. So they use what's called a debt to income level. And most lenders are going to want your debt to income level between or under 45 to 50%. So just as a simple example, if your income monthly is $1,000, 45% of that is $450 a month. So your debts, including your mortgage payment, need to be about that or maybe a little bit under. Obviously, that's a low income, but it gives you an idea of kind of what you would qualify for. So another part of capacity is going to be your down payment. You have to be able to put down between 3 to 5% on most purchases. There are a few programs where you don't have to have a down payment, but again, most of the time you're going to have to put down about 3 to 5%. And your capacity and underwriter is going to check that you have the capacity to make the down payment by obtaining some bank statements to see if you have a savings and are prepared to make your down payment. So other than capacity and character, the third thing the underwriter is going to look at is collateral. So collateral, according to the Merriam-Webster dictionary, is property such as securities pledged by a borrower to protect the interests of the lender. So this is the actual home. This is what the lender is going to put a lien on until you pay off the entire loan. So a collateral is important. An underwriter is going to look at it based on the appraisal, and the appraisal is going to give us a value. The value of the home, we cannot make a loan amount above that value. So obviously, if a home appraises for $100,000, we can't give you a $200,000 loan. It just doesn't make sense. So the collateral, like I said, an appraiser is going to come out. They're also going to look at it and tell us if this home is lendable. Can we lend against this home? So today we have learned about underwriting process of a mortgage and why your character, your capacity, and your collateral are all important ways that an underwriter is going to qualify you to purchase your first home.